Mistakes people make. 5 common mistakes. That's why 90% of the people lose money. The key is we're trying to get into that 10% that's making what 90% is losing. All right. And you guys will see when I show you my account, I will show you all my performance year to date, equity wise, obviously. I handle drawdowns. But besides that, my win percentage, all the details that I look at, and how many of these mistakes I did not do in the first 4 months of the year. So, top mistakes. All right. There's more, but we're just going to get into the 5 because one of the top ones has to be psychology. Okay. Psychology, confidence is extremely important. Anything that you do in life, obviously, but more importantly in trading. So 5 plus common reasons traders lose money in the markets. 1, lack of discipline. Absolutely 1,000,000%. Why are we talking about lack of discipline? Okay, lack of discipline is, first of all, they don't have a game plan. Remember the 3 P's I talked to you guys about last week and in a video? Patience, position, and planning. They don't have discipline. They don't have a plan. They don't have patience. They take too big of a position. So there's lack of discipline, right? And lack of discipline is also coming from the mentality today of get rich quick schemes, right? Oh, this is so easy. You know, everybody during the pandemic took the government money, put it on Robinhood, swung some options, make some money on meme stocks, and then they go, okay, this is so easy. It's just shooting darts on a board. No, it's not. Doesn't work like that. Number 2, not adding stop losses. Well, what are stop losses? What are they? First of all, stop losses are order types that you enter the market as soon as you buy something, actually, or sell something, that will limit your losses. When you guys see my actual trading results on my main trading account, you guys will see what kind of losses I'm taking and what kind of gains I'm taking. In order for you to stop and make yourself more automated, stop losses are, especially at the start, are guaranteed, because I said this many times. I've met so many people who were day traders, then they ended up becoming bag holders, long-term investors, because they got stuck in a stock, they bleed it out, and then they keep watching it. They could have like 50 stocks on their screen, and 48 would be green and 2 would be red. Those 2 were the ones that I'd be holding, and they'd be looking at it. So all their good energy, everything just gets sucked out of them. All right. So stop losses will eliminate that problem. You get in, you put your risk in, you buy a stock at 10. What is your risk? 7%. You put your stop at 930. You get hit, you get hit. You don't, then trailing stops, you keep raising it. Then let's say, transaction or trade is working for you. Stock goes to 11. Now you raise your stop to 1030. Now you got yourself a 3% guaranteed profit. But this is what you have to do initially. Do I use a lot of stop losses? No. Yes and no. When you get to my level, I'm so disciplined that mental stops will do, because there are some risks of stop losses. A lot of people, by the way, say, oh, the market makers are going to go hit all the stops and then wash me out every time. For day traders, that's very, 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 very accurate, because what they do is they'll buy some. They're just basically wildly swinging all over the place, no rhyme or reason where they put their stops. I mean, look, I give them credit. They're limiting their risk. So stop losses is something is important. Trading against the trend. We talked about this again, right? So what I'm trying to do with all these power hours, guys, I'm trying to build upon what I've already spoken. You guys probably heard it in the first 4 power hours. The trend is your friend. Okay. If you're trading against the trend, it's tough it is to trade. And if you're trading against the trend, you're just making your life almost impossible. That's when you're going to fall into the 90% that loses. It is so much easier to trade with a trend, because on a trend, it's established already. You don't have to be in the low, but sell at the high and do all that. if there's an established trend, look, Nvidia has been in an uptrend for, I don't know, 2 years. If you've been shorting Nvidia or betting against it, you got yourself to the poorhouse. That's what happened. But within a trend, there'll be pullbacks, but at least the trend continues. So to me, the most important thing is trade with the trend, not against the trend. Do I sometimes trade against the trend? In fact, in the first 4 months, my biggest gains were trading against the trend, but you guys are not going to be able to do that yet. Not yet. I have some plans for that. But at the moment, once you start trading, please trade with the trend. Look at the picture. Remember, again, picture's worth 1,000 words. Look at the picture of its chart. If it's a downtrend, trade with the trend. If it's an uptrend, trade with the trend. Do not go against the trend. Number 4, hitting the panic button. Look, that happens quite a bit. That happens even with institutions, with hedge funds, because they get liquidated, right? They're on margin. They have borrowed money. You don't want to do that, right? You don't want to. I mean, basically, that's how Warren Buffett made all his money, all his life. Remember, he says when there is blood in the streets, right, you buy things, and that's how he makes his money. But then he has unlimited amount of money. He's not like ours. So what I'm saying is that, if you had put those trading stops, you wouldn't have to panic. See how they're correlated? They're connected. Okay. Here is the biggest one for any type of trader: day trader, swing trader, position trader. Okay. This is called revenge trading. This is like dating somebody and getting dumped, and then you go date somebody right away. Does not work. This is the worst thing. It's really called revenge trading. This is the worst thing you can do to yourself. You get in a trade, you get stopped out. You get in another one, you get stopped out. Things are not working. What did I say last week about that? Stop. Just stop. Turn the computer off. Go away. I have done it. I've done it many times in my career. I've gone away 6 months. Things are not working. Do not keep pushing, right? This is not that you're in Vegas, that you're on the roulette table. You're going to keep betting on red until you win. I'm like, doesn't work. I mean, it works at some point, but do you have unlimited amount of money? No. So, set your parameters. Again, the 3 Ps: patience, position, patience, right? Over trading doesn't display patience. You have to be patient in this. You have to work on your A setup, B setup, C setup. A setup means that's like the likelihood of that being a winning trade is very high. Work on your A setups, B setups, C setups. If it's C setup, why trade? Some of the best trades I have not done are the trades that I have not done, because I feel so compelled that, okay, I lost 4 in a row, I have to make it up. No, you are not going to make it up. That's why 90% loses. So stop. Do not be a stock jockey. Work on your setups, figure out what works best for you, and then move. And one more, obviously, relying on external tips, right? Tips are at the horse races. I said that last week. There are no tips in the stock market. You do your due diligence. You take your risk reward parameters. You apply what you've learned, what you're going to learn here over the next few months, weeks, maybe, and move on. Matt says buy one. I'll answer all these questions later when you guys have questions. So my boss told me to stick to the point. Relying on external tips. Tips are at the horse races. Tips don't work. If tips worked, we all would be rich. I'm sure we all got tips. Ooh, do this. Ooh, do that. In this day and age, the Reddit boys, right? Reddit groups. You have a lot of group chats, right? They just go get hot and then they just push things around. Oh, do this, do that. First of all, if I was hitting 100%, if I had a system that I was making money on 100% of the trades, why would I even tell you? Okay. I mean, I would keep it for myself. All these people on YouTube, ooh, do this, do that, do this, do that. I'm going to actually start blasting some of these YouTubers. They're all going like, all they do is put their green trades up. Look, I made 50,000 today. I made 8,000. I'm like, great, knock yourself out. How about your losses? Show me your P&L. Show me your overall P&L. That's why today I'm going to share with you guys my first 4 months P&L for 2024. Forget the tips. Do your own homework. Figure out what works best for you And then, you execute. Again, 3 P's: patience, all applicable to this, position, risk reward, and planning. Have a plan, have a game plan. Without a game plan, you're not going anywhere. So that's the first topic. The second topic I'm going to hit on today, which we started building last week. What was it? There were 4 keywords, right? Technical analysis, right? I'm a technical trader, but I also pay attention to fundamentals, such as this whole week and last week. We had the Magnificent 7 earnings, Nvidia coming up next week, right? We had Google, Microsoft, Meta, Apple yesterday, although their earnings were not great, but they announced $110 billion buyback, right? I mean, that's why the stock is up. Otherwise, iPhone sales are actually down 10%. But I do read the earnings. I do listen to conference calls. Fundamentals are important because fundamentals establishes the trend for me to trade with, okay? Or what the Federal Reserve didn't do, what Jay Powell, Mr. Helicopter Money's son, what he did say or what he did not say. Read the Federal Reserve release. They had some lines that were crossed in there, right? So that's the fundamental part. And then you apply that to your technicals because all those fundamentals are going to be in the picture of the graph.